Santorum sweeps in Minnesota, Missouri, and Colorado. Greece could be close to a deal to secure its second bailout. Disney disappoints on revenue, and tech bellwether Cisco reports after the closing bell today. I'm Alex Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Happy Wednesday, everybody. We have stocks really trying to make a run for that April 29th high last year on the S&P. Do you think we get to that kind of top?
I think
and
we're
getting a top, actually.
Well, I think we're getting pretty close, and a lot of traders, a lot of people are starting to get a little skeptical of this rally based on the fact that we're overbought, based on the fact that we're now about 33 sessions deep from that December 20th gap and go, and a lot of our targets that were optimistic in December have been met for the first and second quarter in the first 6 weeks. So it makes it hard to stay with, but also hard to fight a move that's trending like this.
Because nevertheless, we still have stocks making 52-week highs, like an Apple, for example. You actually have a few on your list that you think still could go to 52-week highs, like a Qualcomm. So will investors just keep piling in money because they're afraid to actually miss this rally and then trigger some more short squeezes?
I still think there's a lot of money on the sidelines, and people are starting to come back in. People are starting to get confident. I think even if we do get a pause, we're going to bust through this resistance and probably get to 1440 at some point this year. The question is how we get there. So if you look at the chart of the S&P, you look here, this was what I was just talking about, that December 20th gap and go right here. This is what ignited that move during Christmas time out of this descending channel. And since then, we've been riding this uptrend. We've been riding this new ascending channel ever since. And it's getting a little long in the tooth. We had a 2-day floor that was tested the past 2 days, and it held, and we closed on our highs. And now, like you said, here is the resistance from last summer. This is that 1347 to 1358 area, which were really close. Sometimes that brings out sellers, sometimes that brings out shorts. But if we bust through this level, you're going to see the high, if you take a look here, of last year, which is right around 1370. And if we go straight there without a pullback, you're going to see some traders with short on the brain going through some pain.
Well, it's interesting, though, because we mentioned that perhaps cash on the sidelines coming in, and Bespoke analyzed the data and said that when there wasn't a bull move for 6 months and then there was a bull move, that a week after it took out its all-time high there, stocks were up 0.6%, and the next year they were up 14%. I mean, that would take us to what, 1552 in a year if that actually happened?
I think that could happen. And if you remember, like 2 weeks ago, we talked about that term. We said that in the last 5 decades, we're trading below that average PE on the S&P. If we just traded the average of the last 5 decades, you know where the S&P would be?
No.
1,700.
Wow. Okay.
So if you are fighting this move, don't. If you want to put money to work, I think longer term you're going to be good. And I do think that the markets all make new highs, not tech, but S&P and Dow within the next 6 to 24 months.
And we're going to get into financials and high beta tech that didn't really hold up that well yesterday. But before we do that, what kind of rotation are you working on today?
You're seeing it everywhere. You see a group go, and then all of a sudden it gets to an area of resistance, and then it pauses, and then it flags. And then if they flag higher, which they've been doing every step of this rally, then they continue. So traders are looking for continuation moves. After stocks have big moves, they go sideways, and then they continue. So if we go to the financials, you'll see that they had a nice move. They're pausing, and let's see if they continue. Let's go to XLF. There you go. XLF, really big move. You take a back step here and see it coming into major resistance. But here is your core entry. Remember that wedge we talked about? That's when you get involved in your size, and then this is you staying with the rally. Now if you look here, like this is just a pause. This is what we call a bull flag, and a bull flag typically is a continuation move. So you're not seeing any type of pullback in the XLF. So if the XLF gets over this area of 1474, you could see a move above 15, and that's going to take a lot of those stocks with it that have some decent setups.
So if we wind up getting over that level, is that when you sort of be adding to those core positions that you were talking about?
I think that's not, I would say you trade it for momentum. You don't add to your core, you trade it intraday. So like just say Goldman Sachs.
Yeah.
We'll get to that one first because we use that as a barometer this year. We've had 3 different buy prices on Goldman Sachs, and now you could use it again, as far as resistance. Here you go. If you take a look at Goldman Sachs, this is when earnings came out, and this is when we were talking, I think, as it came out, this was your buy. Okay, and then it paused here, and then you had another buy above 112. And now if you look what it's doing here, it's going sideways right in front of a huge resistance. So I'm not long Goldman Sachs, but if it starts to go through this 117, 117 and a half, I'm going to trade it for a cash flow trade for momentum. And if it goes through and goes above 121, you better believe, the S&P is probably going to be taken out, that 1355 area on its way to 1370.
And then for an investor, say not a trader who's like holding on to shares and saying, oh my God, it's run so much, what do I do? What do they do?
They just should stay the course,
They
because
just wait a little bit and see how it performs.
Exactly. If you're in a tier 2 as an investor, that's why we use a tier system. Maybe into that momentum move, you sell a tier. But I think you stay with this because longer term, the markets do feel higher. And sometimes when you sell something, like just say I sold my Apple yesterday, the first time in a while, it's always hard to buy back. So if you have a longer term time frame, and you're not managing your positions, I think you can just stay with them. And
is it the same strategy with JP Morgan?
Yeah, JP Morgan, I've been long for the last few days. This is something I've been trying to hold as a core holding because it's a little slower. It's not as much of a trade.
Didn't also have as much room to make up, right?
Yeah, it showed relative strength, didn't get as battered and bruised. But if you look here, look at this nice trend in JP Morgan. Since you had like a bit of a double bottom or a triple bottom here, it's been trending higher. And then if you look where it is at resistance, it's already actually above that October high, but you have some nice resistance here. It's not pulling in. So if JP Morgan were to get above this, that level there is 38.50, and you're shorted, you cover. And if you're looking for momentum, like me, you buy it, and then the next level here would be about 40. So, but every time we get above a new level, you have to worry about a push-through failure, because that's what traders use to put in a short-term top. You trade it through a momentum area, and if it comes back below that area, it creates that push-through red dog reversal. And once we see that, we'll identify it, and that'll be a day to take notice. Then maybe we switch some gears.
And let's look at the chart at Bank of America, because now it's almost returned the same amount that it lost last year. I mean, it's been a really crazy ride. And we had Dick Bove coming out that's saying Bank of America stock will hit $30 in 4 years. So to me, you're going to say, I want to sell that stock now, because I know you don't like his calls a lot.
Well, he likes to add at the end of moves. That's what I don't like. I don't like.
Right. So if he's bullish on Bank of America, or we do really need to brace ourselves for a pullback then?
I guess that could be. Because like we talked about targets in the beginning of the year, I said, you know what, Bank of America could probably get to $8-9. I said that for the year. So what happens when it gets there in the first 6 weeks?
Right.
Do you raise your targets, or do you stick to your plan? And that's what investors and traders are grappling with right now. And if you look at Bank of America, it's had a really nice move. This is when it just broke this this downtrend right around here, and then it's been slowly, methodically heading to $8. I chose $8 earlier in the year just because I looked at a point of reference. Here's the moving average, so it'll have some some resistance there, especially since the moving average is right there. But I guess if this rally is going to stay intact, I have to up my price target for the year to maybe about $930, $950, because that's where it broke down from last summer. So here's a resistance area, and then this is a bigger one later this year.
And let me just get your take broadly on the banking sector based on Greece. So markets seem to be very optimistic that Greece will come to some sort of agreement in order to secure that second bailout. Are we going to see a euro buy the rumor, sell the news, and how then will that trickle into the financials, you think?
That's a good point, because we've had a nice rally in the euro, and if they do get bailed out and the euro gaps up, that could be the sell the news. So let's take a chart first, or look at the chart of the FXE, and you will see
weaker euro, stronger dollar, weaker stocks. I mean, can you make that kind of correlation? Are you watching that correlation?
Yeah, well, some say that a stronger dollar would be better, for the banks in some sectors. So you have to just, figure out which sector acts best when that relationship changes. For right now, you look at the FXE, and it's coming into some big resistance. Okay, you had a move off the low, acting well, and now it fills this gap right here up into about 132. So right around here, I might look to see if I could short the euro right around there, because that's going to be big resistance. Then if you look at the UUP, if you want to get long the dollar, look where it's come down from the 2280 all the way to here. I would say you would want to be maybe buying this area if you want to buy that dip versus just getting short now. So, let's see if that works out in the next few sessions.
All right, and we're going to be right back talking about high beta tech, including Apple, to see how to trade those stocks. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get into high beta tech. Before we get to the names, as a group, how is this performing? How are they performing?
It's been pretty mixed. Some are acting poorly, some have been hard to hold but better trades, and then you have stocks like an Apple that is just at historic highs and in a league of its own right now.
And it still doesn't really pull back. I mean, and you wonder what kind of catalyst does it really have right now? Sure, we had headlines that Halliburton switching from BlackBerrys to the iPhone. Okay, you're getting a lot of buzz in the blogs about Apple TV, but where's the big catalyst that's really making these new 52-week highs for the stock?
I just think that it's growth and it's still undervalued. You looked at the quarter that came out last quarter, and what year over year they grew 100% or so. Revenues up 80%. I think they traded a PE of 13 or 14. So even though the stock price is very high, which they should do with 3 or 4 for 1 stocks, but that would be much better for the overall market and the investors. Anyway, it's really not overvalued based on growth. But as far as technically, to me, it's a little bit extended. So finally yesterday, that I got rid of my Apple shares.
And let's go to the chart, because where would you be buying it back then if we do see a pullback? Okay,
so take a look here. You know, you remember post earnings, we talked about I was taking Apple calls into earnings. That was a nice trade. And then the day it turned green, that's when I re-entered my stock, because I don't take stock into earnings just in case, because I'm a trader. You know, then you could have added right here. So into yesterday's move, into this extension, I sold some. So, you know, it's opening up a little bit today. What I would do is watch it as a gauge for the market. If it were to go negative and trade back below yesterday's high of just a 469.75, maybe get a little bit of a topping pattern. But I would say, you know, it's extended from all the moving averages.
Right.
I would want to see a pullback when the market decides to, and I would probably like to rebuy it back right here. But if you're an investor in Apple and you're staying the course and you want to be there for the entire year, this stock's going over north of $500. Excuse me. It just depends on how it gets there.
You spit on me a little bit for those of you who are wondering. Okay, and then so I want to look at, say, Google, though, which ended lower on Tuesday. Is that going to shape up to the same kind of pullback here?
Well, Google has been a different trade. Google came out and they missed on their earnings. So I started getting some hate mail saying, Scott, you said Google was your 2012 stock of the year. I was like, you know what, we're only in the second week. So if it would have went, you probably would have sold it anyway. We wouldn't have enough time to accumulate it. So after the earnings, we're like, you know what institutions do? They buy stocks in front of their 200-day moving average. So if you look at Google right here, you will see that it came in, you know, after the disappointing earnings, and it held the 200 days. So we talked about accumulating more, bringing down your cost to average if that's what you do. You also had like a double bottom here. If you don't hold it and you want to trade it, we talked about above 591. That it could fill the gap. So as a trade, it was very calculated here. So if you're a macro holder, that means you're holding your shares longer term. You had the ability to buy back, bring your average cost down. If you're a trader, you made some cash flow here. So now I would see if it can go sideways and hold here. You might even get another trade through 610 to fill a bigger portion of this gap short term.
And let's go to Amazon as well. You said it's been tricky after earnings also.
Well, Amazon, again, macro holders,
right.
You're a little disappointed, but as a trade, it made sense on a calculated basis. I remember sitting here with you, and we were talking about Amazon, or it could have been Jill. I'm like, 170 to 173 is big support. See if it can hold it, because Amazon typically likes to fill its gap. You know, like did it last quarter too. So if you look here at Amazon, if you're holding it as an investor, you're not getting paid. But, you know, remember last quarter, gap down, and then became a nice gap fill, you know, all the way up before turning lower. Here was your gap down on this earnings. This was the level of support that we underlined, and since then it went from 170 back to almost 190, so that's a nice cash flow trade. As far as being an investor, you're not doing so well because it has, you know, the high was back in October, but if you're also an investor, you probably owned it a long time ago. So
you hope you did.
You hope you did. And now it's setting up a nice little 3-day pivot. I guess if it, you know, gets above yesterday's high, above this 188, it can continue, but right now it's like in that neutral spot.
And is Netflix looking a little tired to you? And do you think that all the short covering that we've been talking about is kind of done?
I think yesterday you saw a bit of a topping pattern, but we saw the same pattern a week ago, and it didn't amount to anything. It just amounted to a trade. You know, Netflix was a great, long, an awesome vehicle to trade in 2012. If you look here at the chart of Netflix, I've talked about it every single day. It's probably made 30% of my cash flow this year. This is when it ignited, you know, above this downtrend. And then if you look closely here, this was about a week ago. You put in a little red dog reversal type play. Okay, I was short that day. You could have added through the low, made about $6, $7, but then it continued. Now you see the same type of pattern, so I am short some, you know, versus that high of 130.50. If it were to trade below yesterday's low of 126.81, I'll add to it and see if I can make a little bit more money for it to test this uptrend. Because again, from 75 to 130, that's a nice move. Doesn't mean it has to go lower, but I'm using my setups, and yesterday was a short-term top. If it all of a sudden trades through yesterday's high, I'll get squeezed and I'll cover, and I'm not going to trade the, you know, do the roll-up short short game. I'm just going to use it for a trade.
And then the last stock in this group we want to highlight is Baidu, reporting earnings on Thursday. Doesn't even matter what they wind up reporting. It just seems like it trades with the group. I mean, even Jim on Mad Money on Monday said that Baidu is his favorite stock in the Chinese space, his only one he likes, and the stock goes down the next day. That's very rare. Usually when Jim recommends something, the stock pops. So is it out of favor?
I think the day he did it could have been also the day that Sohu came out and guided lower in the whole internet sector.
Tuesday, yeah.
So it wasn't, so Jim hasn't lost his mojo. But I think that's what happened there. As far as the stock, I'm a little skeptical. I'm not going to take it long into the numbers. I'm probably not even going to play the options. But if you look here at the chart, it's getting tight. As far as credibility, this is one of the best stocks credibility-wise, in the Chinese arena. But again, it's been pretty tight. I'll trade it. You know what? If earnings come out and they're great and they guide higher and it gets above 140 in after hours, I'll trade this in after hours. But I'm not taking it long in, and I'm not doing an option play. If you're long Baidu, you know it's risky. Just have some type of hedge, or you might have to hold your nose and go underwater if it misses.
That was a big metaphor there. All right, let's go to some quick ways to make some cash. We're going to go to Disney. Reported earnings after the bell yesterday, made 80 cents a share on revenue of almost $11 billion, but revenue was light. That was due to a loss in its movie business. But if you look at, say, the theme park business, revenue there was up like 10%. I mean, it just seems also that they're rotating out of their lack of profit movie business into the businesses that actually make money. So is there a want to buy on the dip here kind of feeling today?
Disney's been acting very well. It was pricing in a really good report because it was at high. So when you miss a little bit, you're not just going to go nuts to the upside. Right. So I would say you could buy the pullback here. If you look at the chart of Disney, it's been acting very well.
It's down like only 1% even.
So if it's only down 1%, I would say, this is one area of support to watch. Just say around 39.40 or around, if it holds 40, it's super strong. I think that's where you just said it's trading. So here is where, just taking back 2 days.
40, 60, yeah.
So if you're a macro investor and you're not long it, I'd rather see you buy it closer to here. But if this market doesn't pull in and it stays strong, you'll be lucky to buy it at 40 this morning. But I'm not going to rush for it.
And just to recap, Cisco, they're reporting today after the bell. You don't take stocks into earnings. Are you looking at options? We did a whole piece on this yesterday, but just to recap it.
Not really, because Cisco's had such a big move. And it has to be an unbelievable report. It was a value play below 16. It was a momentum play above 19. We've talked about both of those. So now here above 20. If you're an investor, just stay the course. As a trader, it's really not compelling unless maybe it gaps up and they sell that news. So maybe we'll look to fade it if it's good.
And Groupon reporting after the bell, we're looking for a profit of about $21.5 million, earnings 3 cents a share. It's really going to be how much did they spend to keep growing, and was their growth hurt as they pulled back on their marketing? I think that's really going to be the story people are paying attention to. Yes. Are you trading it though?
Well, any company like this that's so high profile, you want to see earnings come out. You want to see some consistency. So people want to see them making money, and people want to see those costs.
First call with the CEO. Yeah. I mean, it's a big first.
Yes, and I hope they deliver, because last week it delivered for us as far as the stock. If you look here at the chart pattern, remember we talked about this descending trend line that's been intact since the earnings, and I was a buyer here around 20, 40, 21. You had a really nice move up to almost 25. Then yesterday it held in really nice. So I think this is set up for a decent report. I'm not going to take it into it, but I'd love to see it come out, because I'd love this stock to stay in the game with some of these other Facebook alternatives, because they've been great trading vehicles for us this year. So, above this area of 24.90 on a good report, you could see a move back to 26 to 28.
All right, and then last up, very quickly, Qualcomm, IBM, Caterpillar. Those are 3 stocks you say can make new 52-week highs.
Those are 3 stocks that could deliver us to that 1355 to 1370. IBM, you have your price 195. That's the pivot. If it gets above that, that's a nice trade. Caterpillar above 114. That'll get momentum. And Qualcomm above, I think, 6190 to 62. I'm not reading a teleprompter. These numbers are in my head.
All right, so I guess also, we've been ending each of the shows this week with sector rotation and managing those positions, and that still goes even more so now as we sort of tread higher.
Yes. Well, that goes with the momentum rules. Like all 3 of those stocks, if you trade it for momentum, you stay only if it stays there. So if it gets above those levels, you want to see like a 30 to 60 minute commitment to it. And if the commitment's there, they extend. If they push through and you see no buying commitment, then they fail, then they're not ready for that level, and that means that momentum trades off the table. So at this point, I'm trying to be light on my feet. So if something changes with the market, I could switch gears. I'm going to try not to fight the move, but if there are nice setups out there, I'm going to look for cash flow and just, let the market come to me. A few days in the last week, we've just had low expectations, and all of a sudden things started to go, whether it was a DNDN, whether it was the Groupon, whether it was AIG that day. So good trades are showing their face. Just, don't be stubborn and not look at them because you think the market can't go higher.
All right, good stuff. So happy Wednesday, everybody. Enjoy it. I'm Alex Steele from The Street.